Welcome back in another video. Smart Money Concepts Part 8 Fundamentals, Order Blocks, Fair Value Gaps, Displacement, Breaker Block, and Inverted Fair Value Gaps. This isn't just Smart Money Concepts anymore. This is in a combination with ICT. We get deeper into ICT concepts in the later coaching that I'm going to present. But for now, let's conclude. In smart money concepts, we use order blocks, breaker blocks, and fair value gaps or displacement gaps. So, it's never financial advice. Let's put this to the side again. And let's dive into the graphic. Now, first of all, we have to make a market, the order flow again. Let's get into the same as we had before, just to show you that the market always will do something similar. This is, of course, our fractal. Uh, okay, double click there, put this a little higher. Let's put this a little higher so it's clear. And we again have the concept of where is the money, where is the liquidity, where does the market want to go, and what is going to happen. So in our technical analysis here, we can see the market was bearish, but we got a market structure shift here. And so we're going to look into the bullish leg now. Let's put a market structure shift there so it's clear for everybody. I'm not going to draw all the fractals this time because that's not the point of the video. The point of the video is showing the people or showing you guys where, okay, things like this seem to happen. If you record videos, it's not always rose hip and moonshine. So first of all, we gotta identify the order block. We could see the order block here at the low. Let's call it OB, just to keep it simple, an order block. And as always, we can see that 9 out of 10 on a time frame, we will form a displacement or a fair value gap, FVG. And now let's dive into the concept of if you take a long position here and you would use the fair value gap and the stop loss below the low, and we would target this high, let's say a 1 to 3 risk reward ratio, many times you will see that your limit doesn't get filled because price doesn't come back to it. And how does it come? Well, it has a simple reason, because if there is a breaker block, so we got an old order block here maybe, or order block here, a a bearish order block. So if we have a order block there, again OB, to keep it simple, then we will see that this order block, because it doesn't get respected, we can take the order block here, and this order block then changes in a breaker block. Let's call it BB, just to keep it simple and short, because I'm short on time. These videos just give me 10 minutes to explain what I want to say. And we will see many times that price will leave this fair value gap and this order block unmitigated. And why? Because sometimes we come back later to pick it up, but first we go to a higher high again. And the liquidity level, why are we going to target these points? Because we know from last video that the market always searches to mitigate old highs and old lows and goes after imbalances. And we established already that we had an order block here and a fair value gap probably there. So this is a key level where we can go back to, and even here will be an order block with a fair value gap or a displacement. So we know price is going to go in search to mitigate these key levels. And now we checked into the breaker block, and in our TP levels, you know, for TPs, I put lines here now so you can see this is TP1, TP2, TP3 if you would want. And I don't aim too high. I keep it simple. My plan is to take out in a scalp 10 to 15, sometimes 20 pips between the 5, 3 or the 1 minute chart. Depends on where my setup presents itself in the best optimal way with the best OTE optimal trade entry. And in this case, my entry would be in the breaker block, maybe even on top of the breaker block. And I would go for a safe stop loss here. And then you can see we still have the risk reward. Here you can check that of 1 to 2. That's good because if you're going to count the pips, you're going to see that we get a lot of pips out of the market. This is on the weekly time frame, so counting this on XLM USD would be useless. But in the Forex market, you would see on the 5 minute charts, we could easily go to 20, 25 pips. On the 3 minutes, we would get a 15 pip trade. And yeah, you can try to get in here and it would give you the best risk reward ratio, but you would be so many times out of the market that you are losing your time. And in this case, you have a pretty safe trade. Why? Because you know once price breaks the fair value gap and disrespects it, the trade becomes invalid and you can always decide to step out manually, close the trade with a little loss, or even when it taps into the fair value gap, there is always the exit around break even. That's a little more advanced, of course. Next thing I want to quickly show you, what you will see happen a lot too, is that price sometimes doesn't give you the order block, but shoots up in one candle and gives you a displacement. Let's call it this plot, just to show you guys what I mean. And with the displacement, we can assume that price isn't going to mitigate the whole displacement in once. It's just going to tap into it again and go after the liquidity. So it's not a reversal, but a continuation of the trend. And it's because the market is really bullish. You can assume that we go up higher. If the displacement leg happens here, we're going to find fair value gaps on lower time frames in the displacement legs and use them as our optimal trade entry, OTE. And this was it for this session. We looked into order blocks, fair value gaps, and I missed the inverted fair value gap. That would be if you have a fair value gap here, this becomes an inverted fair value gap and it's even stronger. So thank you for watching. Give us a like, a comment, share the video. See you in the next video, and I hope you learned something. Bye.